Hey guys, Kill Stokes here. Welcome back to another video edition of the Trading Coach Podcast. As always, that means you can watch on Spotify or YouTube if you want to see the visual episode, or if you just want to listen, feel free to do so on your favorite podcasting app. In today's episode, we are tackling some of the most confusing questions that newer traders ask. We're going to talk about what is the difference between discretionary and systems-based trading. Is one best for beginner traders to start with? And why copying a professional trader's strategy is one of the fastest ways to fail. So the topic for today's podcast came from a newer trader, someone that we're working with over on the Tier 1 trading platform. By the way, if you ever want to learn with us or surround yourself with a great community of traders, check us out, www.tier1trading.com. And I want to start off by reading you the message that he sent and then digging into some of the topics. All right, so just to give some reference before we jump into the question, we were having a conversation about reading a price chart and discretionary trading and how different traders can read and interpret the price chart a little bit differently. And he says, I think this is another reason why so many people find trading difficult to understand. It's confusing when you see a professional, profitable trader trading a proven, back-tested strategy for years, but then say, hey, don't just copy this and go and back-test it for yourself. Most people would be like, but you've already done that and it's profitable, so... and he says, if you design an engine and the car works, I just want to drive the car, not test the engine again. However, I'm starting to realize we have to see the strategy and results working for ourselves, not just the documented results, but also to train our eyes to see them coming in the future. For example, everyone's X to A, referring to harmonic patterns or advanced pattern formations, may be slightly different depending on how they see it. Is that a decent assessment, or is there more that I'm missing? Another YouTube video, perhaps? And then I follow up talking a little bit about, discretionary trading, blah, 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 blah. And the follow-up question that he said was, nope, that's time frames. Where are we at here? Losing it, guys. Oh, so should a new trader start with a mechanical system and then move to a discretionary, more subjective trading system once they're experienced? So I want to start off with the subject of copying other traders. And although the trader didn't mean it as like a signal service, he meant find a professional trader that has a strategy and just like copy their strategy, not copy signal for signal. But I do want to start with the signal service side because lots of you, I'm talking to you, you know what I'm talking about, believe that, hey, if I just find one of these guys on the internet that are selling systems and I simply copy the system, then I will make lots of money and that's my shortcut to success. Or you may be saying to yourself, well, I'm just going to copy the system for a little bit until I get enough money and learn how to trade myself, and then I'll stop and trade my own thing. And I will tell you this, both are very, very bad ideas. I've got plenty of examples to tell you why they're bad ideas, but not enough time because I have to leave in a little bit. But I'll just tell you this one story. My mentor, Jason Stapleton, one of my mentors, Jason Stapleton, when he first started trading, he joined a signal service. And the guy was phenomenal. He was a professional trader. He was shooting out signals left and right. They were profitable. The entire room was happy, right? Imagine you come in, you get some signals, someone else does the work for you, you make money, life is good. And like many entrepreneurs, he started thinking about the future. He's like, okay, well, this is easy. I just wait for this guy's signal and I can make money. I have all this free time because I'm not actually doing a lot of work. I can use this other part of my free time to do this and that and that and that, right? We start thinking about the lavish life that we can live. However, there was a problem, and the problem was this. One day, this trader, the one that was giving signals, came in and said, hey guys, so at the end of the month, I am done with my signal service. And everyone's like, what? Huh? What do you mean? He's like, yeah, I've been doing this for a long time. It's time to retire and have some fun with the kids and family. And, you'll be all right. And no, right? Because the problem was many of these traders were relying on this trader to provide them signals, meaning that they were following for a long enough period of time that they did stuff like quit their job and made this their full-time income. The problem was they didn't actually have a skill aside from the skill of using their eyes to see what the signal is and then typing it in their own thing. So as soon as this guy said I was done, it was like them pulling the rug from beneath them. Like they had nothing to rely on. And the crazy thing was like, this is their lifestyle, right? It's very similar to imagine, and this is a bad experience, but we know that when COVID hit in 2020, a lot of people got the axe, meaning a lot of people were working, a lot of people thought they were safe, and then they realized that they weren't safe because jobs had to make some very difficult decisions. And a lot of people never saw that coming. They never prepared for the chance that they would be fired, and they didn't really have a backup plan. They put all the chips in on this one thing, which was going good and seemed to be going good for the rest of their lives, and all of a sudden it wasn't. And they didn't have anything to fall back on, right? This was the same thing, and people were panicking because, again, you uplifted your life because of this signal, and it was no longer there. And my mentor, he wasn't one of these people that banked his life on this signal service, but he was like, hey, what if I just give you X amount of money a month and you give me the signals privately? And he was like, nah, I've got enough money, it's good. So the point is, you never want to put the point of trading is to have control over your personal finances, right? Many of the traders that we work with at Tier 1 Trading are very well off. And I always ask them like, hey man, you've been a very successful entrepreneur. You've grown this business. You've done that. You've done this. Why are you working with us? Why are you interested in trading? Because we always want to know the motivations of the traders that we're working with. And they say, hey, well, I want control of my finances. I understand that I have investment accounts that are managed by outside people. I know I have this. I know I have that. But this actually gives me control. And no matter what happens in the world, if a bank blows up or if this happens or if an account closes, I know that I have the skill and the ability to take money and then have that money produce and grow more money from it. And that is probably the biggest safety net that you can have. Personally speaking, time freedom is awesome as well. You can do whatever you want, whenever you want. But that, financial freedom is first and foremost because you don't really have time freedom until you get financial freedom. The point is, we don't want to rely on others for our success. It may work in the short term, but it's not going to work in the long term. And honestly, it's no different from any other job where you're working and you can be fired any day for not even doing anything wrong just because the company made a decision, and that's just not a great place to be in. Now, when it comes to the way that our trader was talking about copying traders, right? Finding a trader that has a proven system, they've back tested it, they've been trading it live for years, it's consistently profitable, and saying that, hey, I know how you trade, I just want to copy how you trade, not the signals, but the style. I don't want to back test it myself. Why can't I do that? You've already built the engine. Just give me the keys and let me drive, right? The problem with that is confidence. You see, over the years, I've learned, and I had this same mindset as well when I first started off. This is why I can relate to you guys so well. But over the years, I've learned this. The best trading strategy in the world will fail if a trader can't properly execute it. We've even done tests on this. It's amazing. We as human beings, and specifically traders, have this oddly great ability to take the good and make it bad because we can't help ourselves to not mess stuff up and do things different. It's weird. It's the funny thing about systems trading is that a lot of traders get into systems trading because it's systematic. There's no gray area. It's black or white. There's no kind of discretion. There's no subjectivity. All we have to do is follow the system. However, probably the biggest hurdle that human beings have is actually being able to consistently follow the system, because we always tend to, I can do this and make it better. I don't like that signal, I'll skip it. We just mess things up. It's weird. It's a weird ability that we have as humans. We tend to mess things up. Look at our planet. It is beautiful. It is blue. It is one of the only planets probably in the universe that has life, and we are destroying it. Yeah. Anyway, going back to just copying a system, the reason why traders can take a perfectly good system and sabotage it is because what's more important than the system, or I guess what's just as important as the system, is the belief, is the confidence. And I can tell you that belief and confidence is what's going to allow you to take every single trade. It's going to allow you to take a trade that you don't think is going to win. It's going to allow you to stay in a trade while it's going against you. It's going to allow you to not take targets early when it's going in your favor. It's going to allow you to not skip past that valid signal or make up your own signal, right? That is confidence. It's going to allow you to pursue or persist through drawdowns, right? It is confidence. And the only way to build confidence, there's two ways. One is through experience in the market, right? I've been trading for 20 years. I have a lot of confidence in what I'm doing because for the majority of those 20 years, I have been consistently profitable and I have that experience, I have that belief. That's the whole belief, actions, results cycle, right? The more you believe in yourself, the more likely you are to take the right actions. The more times you take the right actions, the more you get the right results. The more you get the right results, you start believing in yourself even more. Then you take more of the right actions, you get more of the right results, you believe even more, and it just like snowballs into this big, awesome thing. When you don't have that experience, because again, like as a newer trader, I can't just be like, yeah, just build confidence, just spend 5 years in the market. Well, that won't work because if you don't have confidence, you can't build confidence, right? So you'll never do the thing that can get you confidence. You'll just lose money, then you'll drip confidence, right? The only way you can get that is we have to manufacture that. And how do we manufacture it? Through backtesting, right? Backtesting is that methodical process of going through historical data, testing our system and strategy thousands and thousands and thousands of times, right? And it sucks, right? To get the right result. Even, right, following up on our last podcast about AI in trading, and oh man, I got a good comment about this on the YouTube video. I don't remember what it is word for word, but let me find it real quick. All right, finally found it. Our trader says, one thing I would like to say about taking the human element out of trading is also a skill that can be learned and built. And AI can only do so much. Using AI for productivity rather than depending on it is the approach I think people should take in this case. And this goes from another conversation we're having on the difference between using AI to backtest for you, right? You're not going to build a lot of confidence in that because again, this is someone showing you the results, but you're not actually going through the journey, right? So that's not going to build confidence. But how AI could be beneficial in backtesting is by, after you've done all the work, using it to break down certain segments, like what day of the week is best to trade, or what days of the week are bad to trade, what hours of the day are good and bad, right? Those type of filters where we're digging into the data. But the data acquisition must be done by you if you want to build that confidence. And it's that confidence that's going to allow us to actually execute that profitable strategy, where if you don't have that confidence, you're going to be able to do it for a little bit. But trust me, as soon as something goes wrong, right? As soon as that drawdown comes, and here's the secret, come closer, right? All systems and strategies go through drawdowns. You're going to start doubting it. You're going to start saying the system is bad, the system doesn't work, and you're going to start making those human mistakes, which are ultimately going to disrupt your results, and you are going to fail because as human beings, we take nice stuff and we mess it up. Something else that's important to understand, I'm going to go back to the engine reference that our trader used, where it's like, hey, you guys have built the engine. I just want to put the key in the ignition and vroom, vroom, right? Understand that, if we're staying on this engine analogy, what happens to an engine over time? Well, when you buy a car brand new, the engine is great. It's running fantastically. But then over time, right, that car starts to give you problems. The car doesn't work as efficiently as it used to run, and we spend a lot of money on fixing things up. I think the average, like at least for Americans, we spend between like $800 and like $1,500 a year on car maintenance because things break down, things don't work the way they're supposed to work, and it costs us money to repair them before eventually needing to ditch the car and get a new car. Now, if we're looking at that in the trading perspective, if our results are here when the engine is fresh, and they progressively get worse, right? Well, that's not a good thing. That means we're losing money. If we have to spend money to maintenance the machine, that means we're losing money. This is the opposite of what we want for our trading. We want our trading to earn money. And the point is this, by just trading a system that someone else has given you and you don't have any belief or you don't really know how it works, you're just kind of plug and play it, you don't know how to make it better. And the biggest lie that's out there in trading, especially for these people selling you systems, is that the system works the same way all the time. What a lot of these traders do is they do something called curve fitting, where they have the performance of a system, let's say over a 5-year period. And let's say year one is like break even, and year two is a little bit profitable. And then there's like this 3-month stretch or 1 month stretch in year three that's like makes like a 20% return. And then it goes back to being break even or lose a little bit, right? They're not going to sell you, hey, buy my system, break even for 2 years, 1 month, 20% return, then break even, a little bit of drawdown for 3 years, right? They're not going to do that. they're going to sell it and say, hey, my system, let me know if you heard this before, right? My system made 20% in 1 month. Let me show you how for just $19.97 or however much these things cost these days. I don't know, $19.97 used to be like a thing on those infomercials, but that's what they'll sell you. And it's technically not a lie because during that 1 month period, it did make a 20% return. They're just like ignoring all the other months that happen, right? It's kind of like I'm so glad I'm had a girlfriend and married before like the social media age. But it's like I got a friend of mine who's out there doing this online dating stuff, trying to find someone because people don't meet in person anymore. Thank you, COVID and social media. But he's looking at all these pictures of people and all these dating sites. Man, they're gorgeous. There's perfect. There's no flaws. And then he's meeting them in real life. And he's like, "Who are you? Like, what happened to this person?" And they're like, "Oh, the lighting was right that day." And he's like, "Oh my gosh," right? They don't tell you that part. They don't show you what they look like in the morning. You just see them when they're made up and at their best because they're trying to get that date. It's scary, man. I couldn't imagine. I would just marry a robot. That's a thing right now, I think. Yeah, I would just marry a robot. Anyway, the point is, what these traders that trade mechanical systems don't tell you is that it takes a lot of work to manage a system. And this is coming from someone who has traded systems in my own right. This is coming from someone who has created systems and we've sold them to clients in the past, right? Systems need management. They need maintenance, right? You need to, one, yes, it's sold as a plug and play, but you need to make sure that your system is executing the way that it's supposed to execute, just like with any type of machine. You also need to make sure, this is probably more importantly, that your system is able to adapt to different market conditions. So I'll give you a really simple one. If you have a system that is volatility based, let's say your targets are based on a certain ATR multiple where it triggers you into a trade for whatever reason, and then your stop loss is 1 ATR below, your target is 2 ATR above, you got a 2-to-1 risk reward, everything is great. But let's say you've gone from a very volatile time in the market, right? Early 2000s when the euro dollar is moving like 200 pips a day on average, right? Crazy movement. You're smashing these 2 ATR targets left and right. Smash, smash, boom, boom, right? But then you enter that era of low volatility, 2016, I think it was, where the volatility was sucked out of the market. And now all of a sudden that euro dollar that used to be moving 200 pips a day is moving like 70 pips a day. Well, all of a sudden that ATR is a little bit different. Those average targets that you're trying to get is a little bit different. The movement is a little bit different. It's a little bit more choppy, right? Your system is maybe getting caught up in that chop a little bit more than it used to because it just didn't exist before when you originally created it. You have two options, right? One or three options. One, you don't pay attention to it. You sit there, you let it lose. Two, you ditch the system because it doesn't work anymore. Or three, you open up the hood, you get in and you make those adjustments. And for someone who has built the engine or at least knows how the engine works, you can pop that hood, you can get in there, you can make those adjustments. If you just were given an engine and a key, you're popping that hood and you're like me every time I'm trying to fix anything remotely wrong with my car, staring at it. Maybe I should. Yeah, right. I've no idea what to do. I'm not a handyman at all, right? My wife is great, not me. I'm bad. But that's the same thing as just being fed an engine with no idea how that engine is made or how that engine works. I guess the best example I can give you on this, and probably should have said this earlier, but it's just coming to mind right now. Think about the difference between a struggling trader, maybe that Mark Douglas boomer buster phase trader that's kind of stuck at break even versus the successful trader. The struggling trader has been given this engine, they're trading it, but like I said, it starts off well and then it gets inefficient and then they spend some money and then they fix it and then it gets inefficient. You're kind of just always stuck between this like a little bit profitable, a little bit in drawdown, kind of right in the middle. The professional trader is more like an F1 driver, right? They are consistently, and the F1 movie was amazing. Brad Pitt, great job, right? They're consistently taking their strategy. If you imagine your strategy being the car, you're taking it into the lab. You're taking it into the wind tunnel. You're thinking about what adjustments I can make. How can I handle this curve better? How can I increase my top speed? How can I do this? How can I do that? How can I prepare my strategy for battle? If you saw the movie, you know what I'm talking about, right? This is what professional traders are doing on a consistent basis because they know the courses are always changing, the market conditions are always changing, and we have to maximize our system per that market condition. The Trump era right now, 2.0, is a great example of that, where we're seeing a lot more sporadic volatility because all of the threats and invasions and oil stealing and tariffs and all this other stuff that's happening. Now, the next part of the question asks, as a newer trader, would you say, and it really wasn't a question, it was trying to tell me, right? Would you say that it is better for a newer trader to go to a mechanical system, start from a mechanical system, I guess, and then go to discretionary trading once they feel that they are prepared? And my answer was not necessarily. Now, real quick, the difference between mechanical trading, systems trading, and discretionary trading is this. Systems trading, as you can imagine it, as like following black or white rules. So like imagine something is coded, where like it doesn't even have to be coded. It could be indicator based, it could be coded, but there's no room for error. So I'll give you an example real quick, and this is something that we've been talking about in the live room with our RSI. I have a video planned to put out, but I don't know if I'm ever going to get to it. But all right, so let me give you an example of this RSI strategy real quick we've been working on. I won't take you through the whole thing, but just kind of like the basics of it, because it's a good example of a systems-based trading strategy, where I have my RSI right here, my green line. I adjusted it to 66. I'm going to adjust my my red line. I will just do a bullshit example. I don't want to spend too much time here, but if if RSI breaks above 66 level, then I buy. So this is my buy right here. So imagine yourself as being like a trader. If I gave you this system, is there anything black or white, right? Is there anything that could be debated? I don't have to read a price chart. I don't have to determine the strength of a candle. I don't need to look for an outside return. I don't need to analyze structure. All I need to do is look at my indicator and ask myself, did indicator break above 66? If it is 66.01, then yes. If it is 65.99, then no, right? Or if it's 66 even, it's no. So it's black or white. That would be an example of a systems-based strategy, something simple, rules-based, binary. A discretionary-based strategy would be more like, was this the one we had the breakout on? We had a nice flag breakout on Aussie. We had Aussie Canada, if you guys remember this from the weekend trading video this past weekend, right? Remember this pattern right here where we had flag pole and we had our nice consolidative pattern and we projected a breakout, and then what did we do? Yeah, we broke out, right? But this is subjective. Akil, is this a flag pattern? Should the trend line be drawn like that? Are we in a bullish trend? What about on a higher time? Right, there are things that can be debated. We can, with the RSI, I can have 100 traders in the room and ask them, hey, did we break above 66, yes or no? And 100 traders out of 100 traders are going to agree. I can go back to that same room with a flag pattern, show them and say, hey guys, flag pattern. And we may have 60 traders be like, yeah. We may have 30 traders be like, no. We may have 10 traders like, right? There's going to be some subjectiveness to this pattern, and that's what makes it a little bit confusing. Now, a lot of newer traders are intimidated by subjectivity because it's like, oh my gosh, well, how do I know if it is? How do I know if it isn't? I see things and Akil sees it different and Jason says it different and blah, 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 blah. It's like riding a bike. It's like any other skill. You have to train your eyes, right? Trading is learning a new language, right? It is very similar to learning any language, where there is a dictionary way to learn a language, but then there's a real way to learn it, right? So I was learning Spanish a couple years ago, and there's a few Spanish people on the track team that I work with, and I was trying to speak Spanish in like the way I was learning from, I forgot who I was learning from, whatever, one of these online courses, and they laughed at me. And they're like, Keel, you sound like a nerd. I'm like, what do you mean? Like, isn't this how it's said? They're like, well, yeah, that's how you say it, like, per the book, but in real life, we just use this word. But I'm like, but that word doesn't mean that. They said that this means that. They're like, yeah, but this is how we talk, right? So it's the same thing. It's a skill that you have to learn, but it's going to be somewhat subjective. But the more you converse with people in that language, the more you learn it, and it becomes second nature. The more you train your eyes to see what's in the chart in front of you, and I just realized I'm not even showing my screen here. I'm sorry about that. I'll do some creative editing later and put it in brain fry. I didn't plan on showing the screen, and I showed the screen. I didn't have my thing recording the screen, but I'll put some stills in there, but you would have already seen that by now. But the point is, the more you train your eyes on this skill, it becomes less kind of random and more consistent in what you're able to achieve. So going back to the subject of should newer traders do a more mechanical based system versus a discretionary style of trading? The initial thought process would be yes, right? You would think that would be the answer because, okay, newer traders are worse at skill because they haven't had the experience and the chance to develop it yet. So how about I put myself in the position where I need to do less work, less is on me, and I can just follow something. Now, one, this is why we don't want to rush into trading, right? As a trader, you shouldn't be trading live within I would say at minimum, the first 6 months, probably more of a year you shouldn't be trading live, but let's say at minimum the first 6 months. So you need to give yourself 6 months to learn before you ever think about trading live, right? So if you're at the point where you're trading and you haven't had a chance to build your discretion in the market, you're trading too early. But two, and going back to the previous podcast we spoke about, I believe that a trader's success comes from doing something that they enjoy, doing something that they like. I traded a mechanical system early on in my trading career for the pure fact that I was new. I felt like this was the easiest thing for me to use so I can start making money. I didn't really like it. I didn't really enjoy it. I didn't really believe in it. I didn't have confidence in it, but my mentor was trading it. So if it was good enough for him, it was good enough for me. And I failed miserably at that for the same reasons I mentioned earlier. I would take it. I would disagree with some of the signals. It would go on losing streaks. I would lose confidence. I would start making mistakes. And ultimately, I didn't make profit from it because I just didn't truly believe in it. And again, imagine it like being in a relationship with someone that you don't actually like. It's awkward. You find yourself doing weird stuff because you're pretending pretty much. So what made me a better trader is when I ditched that system, I went back and took time to actually learn instead of trying to find a shortcut. And I fell in love with certain styles and strategies, and those are the same styles and strategies that I trade today. And I put more effort into them because I actually liked them. They clicked with me. They were easy, relatively easy for me to master. I say relatively easy because, yes, there's a learning curve, but I actually enjoyed doing it. So it took time, but it didn't feel like a job, like a hassle. So I really think the determination of whether you should go mechanical or discretionary isn't necessarily based on what's going to allow me to make money the quickest. It should be off of what do I naturally feel is the best. Because in many cases, the thing that we think is going to allow us to make money the quickest, we're actually going to sabotage ourselves, and it's going to take the quick money route is going to take longer to produce profit than the longer money route, right? If we're thinking big picture and the end game. So again, there's no wrong or right answer, but as a trader, you have to be honest with yourself. Am I approaching this strategy because I just want to make the money fast, or am I approaching the strategy because I actually like it, I actually enjoy it, and I actually want to be good at it? And as I told the trader in the question, that's an answer that only you can give. Hope you guys enjoyed the show. I'm right on time. I have to go, but rate, review, subscribe, like, do all those things to support the channel. I'll see you this weekend with another weekend Trading Edge video, sharing with you the best trading opportunities that are on my radar for the week to come, assuming power doesn't go out from this massive storm that is heading our way. But if that stays away, or if I can keep power and heat on, I will be there with more ideas. Last week they were great. Let's see if I can come up with some good ones again. All right, take care.